Investing in the stock market historically has been one of the most important pathways to the financial success. But when you dive into the researching stocks, you may hear that there are different types of stock. Here are the two major types of stocks that you should know. This is common stock and preferred stock. What's up guys, this is Stockspert. Today we are talking about types of stocks, preferred stock and common stock. Before we go further, please click that like button and subscribe to the channel so more people can find this useful information about types of stocks. You may find other educational videos about stock investment and personal finance in the description or in the cards section. Both types of stocks can be worthwhile investments, and you can find both types of stocks on the stock exchanges. The main difference between preferred stock and common stock is that preferred stock acts more like a bond with a set dividend and redemption price, while common stock dividends are less guaranteed and carry more risk of a loss if a company fails. But there's far more potential for stock price appreciation. Even though you might think that preferred stock is a better investment, the better choice actually depends on your objectives. So let's review more about common stock. Common stock gives investors a stake ownership in a company. Many companies issue only common stock, and there's a lot more common stock selling on stock exchange than preferred stock. Investors that hold common stock usually have the right to vote in a company's board of directors and to approve major corporate decisions. One of them may be mergers. Though some companies have a non-voting class of shares, so this type of stockholders cannot vote. The most attractive feature of common stock is that its value can dramatically rise over time as the company grows bigger and more profitable. This can create very good returns for investors, while common shareholders are last in line to get anything if a company fails. Lenders, suppliers, debt holders, and preferred stock owners are all ahead of shares of common stock. A common shareholder's willingness to take the risk if things go badly is offset by the potential for big returns if things go well. And by the way, if you want to invest 100% commission-free for stocks and ETFs, you may want to choose eToro. I'll leave the sign-up link in the description. And now let's review preferred stock. Preferred stock works often more like a bond. Preferred stock dividends are often much higher than dividends on common stock and fixed at a certain rate, while common dividends can change or even get cut entirely. Preferred stock also has a set redemption price that a company will eventually pay it to redeem it. This redemption value, like a bond at maturity, limits how much investors are willing to pay for preferred shares. The label preferred comes from the following advantages of the preferred stock. The first is preferred stockholders are paid before common stockholders receive dividends. The second is preferred shares have a higher dividend yield than common stockholders or bondholders usually receive. And the third one is preferred shares have a greater claim on being repaid than shares of common stock in the case of company goes bankrupt. In other words, they are really preferred by investors looking for more secure dividend and lower risk of losses. The two main disadvantages with preferred stock are that they have no voting rights and there are limited potential for gains. A company may issue more than one class of preferred shares. Each class can have a different dividend payment, a different redemption value, and a different redemption date. Companies can also issue convertible preferred stock. In addition to the normal attributes of preferred stock, convertible preferred stock gives shareholders the right to convert preferred shares into common stock under certain circumstances. Most investors buy stocks for long-term growth, so investing in common stock is usually the better choice because of the greater upside potential. The key is to consider your ability and willingness to hold for many years and ride out volatility that can lead to losses if you sell in a downturn. If your goal is generating income, preferred stock may be what you are looking for, especially when the interest rates are low. But remember that while the preferred stock is safer than common stock, it's still not as secure as a bond. So today we reviewed types of stocks, preferred stock and common stock. Write down below what types of stocks do you have in your portfolio. I hope you liked this video. Click the like button and subscribe to my channel. See you in the next video.